why everything feels more expensive, even when inflation is down. You ever notice? Everybody keeps telling you inflation is cooling down, but somehow your wallet missed the memo. The news says inflation is easing. Meanwhile, eggs require a small business loan. Doritos bags now contain 6 chips and emotional trauma. And McDonald's is pricing combo meals like they're serving Wagyu beef prepared by Gordon Ramsay. Something doesn't add up, and people know it. That's why Americans right now are experiencing one of the strangest economic disconnects in modern history. The economy, on paper, looks fine, but psychologically, people feel poorer. Tonight, we're going to explain why. They're not lying, but they're not telling the whole truth. Now, to be fair, when economists say inflation is down, they do not mean prices went back down. That's the trick. They mean prices are rising slower. That's like somebody stabbing you 12 times last year and only 4 times this year, and then announcing, good news, violence is declining. You're still bleeding. That's the problem. Americans hear inflation is down, but what they feel is, why does toothpaste cost $9 now? Because prices usually do not rewind, they stack. And after the pandemic era, corporations, retailers, service providers, insurers, landlords, and basically everybody with a billing department realized something important. People got psychologically acclimated to higher prices. And once consumers normalize pain, the market rarely gives the money back. The age of shrinkflation. We're now living in the golden age of corporate finesse. Shrinkflation, the most disrespectful economic magic trick of the modern era. Everything shrank except the price. Cereal boxes, smaller. Potato chip bags, mostly air and disappointment. Ice cream containers, they used to be half gallons. Now they look like scientific samples. And corporations do this because they know something psychologically devastating. People notice price increases faster than quantity decreases. So instead of charging more openly, they quietly remove value. This is why people feel gaslit. Because your instincts are correct. You are paying more for less while being told inflation is improving. That creates economic distrust. The subscription economy trap. Then came the subscription apocalypse. At one point, subscriptions were convenient. Now, every company on earth wants monthly tribute. Streaming, music, cloud storage, AI tools, food delivery, premium memberships, sports packages, software, security systems, even heated car seats. BMW literally experimented with subscription-based features inside cars. Imagine buying a refrigerator, and then the ice dispenser says, please upgrade to Ice Premium Plus. This is the new economy. Ownership is disappearing. You don't own software anymore. You lease access. You don't own entertainment libraries. You rent temporary permission. And because the charges are fragmented into tiny recurring payments, people psychologically underestimate how much money is bleeding out monthly. It's death by 1,000 subscriptions. Why people feel angrier now. Here's the deeper issue nobody discusses. This isn't just economics anymore, it's morale. People can tolerate struggle when they believe progress exists. But what Americans increasingly feel is, I make more money, yet somehow live worse. That creates resentment, especially when people open social media and see influencers pretending everybody is rich. Luxury lifestyles everywhere, finance gurus selling fantasies, and corporations reporting record profits while consumers downgrade from name brands to survival mode. And this is where the psychological fracture begins. The public no longer trusts pricing, institutions, corporations, metrics, or economic messaging. Because lived reality matters more than charts. A man paying $18 for a burger combo doesn't care what the CPI report says. The real issue is purchasing power. This is the real conversation, not inflation. Purchasing power. Can your income still command dignity? That's the issue. Because historically, Americans tolerated capitalism under one condition: upward mobility. The belief that hard work produced advancement, but when housing explodes, healthcare explodes, insurance explodes, college explodes, food explodes, and wages lag behind asset inflation, people stop feeling like participants in the economy. They feel farmed by it. That's why younger generations increasingly sound cynical. Because many feel the game transformed from build wealth into avoid collapse. The BWO angle. And for Black Americans specifically, this conversation becomes even more important. Because inflation hits communities with lower inherited wealth harder. If your family owns property, businesses, equities, assets, intellectual property, inflation can sometimes be survived or even exploited. But if most income goes toward consumption, inflation behaves like a silent tax. And this is why BWO keeps discussing ownership, investing, institutional thinking, asset acquisition, business formation, and cultural economics. Because eventually, you must move from being priced to being positioned. So no, you're not crazy. Things do feel more expensive. Because they are, even if inflation slows. And until wages, ownership, productivity, and purchasing power reconnect, the average person will continue feeling economically squeezed. Even while being told the economy is strong, this is why perception and statistics are now at war in America. And honestly, perception usually wins. This is Black Wall Street odds. Like, subscribe to our YouTube and Discourse platforms. And remember, the people who understand the system usually profit from the confusion of those who don't.